Is Disney stock a buy after more than 60% rebound in 6 months? The Walt Disney stock broke out in August after coming back more than 60% from its post-virus crash lows in March. It's been a wild ride on Wall Street since February as the stock market fell into a bear amid the virus crash. Disney stock got slammed as the Dow Jones company closed its theme parks and suspended Disney Cruise Line departures. Shift for Dow Jones Disney stock. And its quarterly results showed some of those ill effects. But now it's looking forward as the world tries to shift into a post-virus mode, even though the virus cases and deaths continue to rise. On May 11, Shanghai Disneyland opened for the first time since late January, with limited capacity. Masks and social distancing measures were enforced. Tickets sold out within minutes for opening day. But Hong Kong Disneyland, which reopened June 18, has temporarily closed again due to new restrictions set by government and health authorities in Hong Kong. The media and entertainment giant reopened Walt Disney World's Magic Kingdom and Animal Kingdom July 11. Epcot and Hollywood Studios followed suit on July 15. But its California theme parks and resort hotels have been closed since mid-March. On June 4, NBA owners voted to restart 2019-20 games at Disney's ESPN Wide World of Sports complex in Florida. That sent the stock up 1.2% for the session. The season kicked off July 30, with the Los Angeles Lakers edging past the Los Angeles Clippers and the Utah Jazz topping the New Orleans Pelicans. But ESPN owner Disney faces new potential headwinds. The virus has caused delays and rescheduled games in Major League Baseball. The NBA postseason was in jeopardy after the August 23 police shooting of Jacob Blake, an unarmed black man. After a 2-day boycott by players in response to the shooting, the league resumed play on August 29. Does that mean Disney stock is a buy right now? Read on to find out. Good news for Disney Plus fans. On July 3, the movie version of blockbuster Broadway hit musical Hamilton began streaming only on Disney Plus. It was originally planned to hit theaters in October 2021. The film stars the original cast including Lin-Manuel Miranda and Daveed Diggs. In light of the extraordinary challenges facing our world, this story about leadership, tenacity, hope, love and the power of people to unite against the forces of adversity is both relevant and impactful, Executive Chairman and former CEO Bob Iger said in a statement. Disney reportedly paid $75 million for the worldwide distribution rights to the musical, which won 11 Tony Awards in 2016 and the Pulitzer Prize for Drama. As expected, Hamilton reportedly drove more subscribers to Disney Plus. After the movie's global launch, the Disney Plus app was downloaded more than 752,000 times between Friday and Sunday, July 3 to 5, according to TechCrunch, based on Apptopia data. The US accounted for 458,000 of the downloads. That marked a 74% jump in new weekend downloads in the US versus the prior 4 weekends in June. Since Disney had ended its free trial week ahead of the Hamilton debut, the downloads are all paid subscribers. Coming to a TV near you. Disney's tentpole live-action movie Mulan went straight to Disney Plus as a one-time premium offering in most markets. It was released September 4 in the US, Canada, Australia and New Zealand for $29.99. The movie's launch had already been delayed for months due to the pandemic. Disney Plus downloads jumped 68% following the movie debut, according to researcher Sensor Tower. Disney plans to roll out a new Star-branded streaming service next year, tapping content from ABC Studios, Fox Television, FX, Freeform, 20th Century Studios, Searchlight and other Disney-owned assets. Disney's stock price buoyancy can be traced to the perceived long-term value creation that is direct-to-consumer, much like Netflix before them, Moffett-Nathanson wrote. Logically, if you love Netflix's stock at $500 per share, Disney's enterprise value is just too low. Moffett-Nathanson boosted its Disney price target to $118 from $111 and reaffirmed a neutral rating. Rosenblatt Securities, which has a buy rating, lifted its price target to $145 from $135. Credit Suisse and Guggenheim upgraded Disney stock to buy and raised their respective price targets to $146 and $140. JP Morgan has an outperform rating and $135 price target. On August 19, Citi boosted its price target on Disney stock to $150 from $135, citing strength in its streaming services business. Eager back in control, for now. On April 12, the New York Times reported that former CEO Bob Iger is reasserting control at Disney in his new role as chairman. Iger has effectively returned to running the company to help out new CEO Bob Chapek amid the virus crisis, The New York Times said. A crisis of this magnitude and its impact on Disney would necessarily result in my actively helping Bob Chapek and the company contend with it, particularly since I ran the company for 15 years. Iger told The New York Times in an email. The media giant made headlines February 25 when Iger stepped down, effective immediately. Chapek, chairman of Disney Parks, Experiences and Products, was named the new chief executive. Iger will stay on until the end of 2021 as executive chairman and direct Disney's creative endeavors. Under Iger's 14-year-plus tenure, Disney stock soared more than 400%, or about 12% annualized. He revamped the theme parks, brought Star Wars, Marvel and Pixar into Disney's movie universe, and launched Disney+. Disney stock fell 2% after hours February 24, the day of the announcement. But the next day, several analysts including Morgan Stanley, Citigroup and Merrill Lynch reiterated buy ratings on the stock. Disney Plus continues to grow. After the close August 4, Disney reported a surprise fiscal Q3 profit of 8 cents a share. That's a 94% drop from the same year-ago quarter. But analysts expected a loss of 43 cents a share. Revenue tumbled 42% to $11.78 billion, missing Zacks investment research estimates for $12.65 billion. Parks revenue sank 85% to $1 billion, while movie studio revenue fell 55% to $1.7 billion. Disney Plus had 60.5 million subscribers as of August 3, up from 54.5 million in early May. The media giant's prior forecast called for 90 million subscribers by 2024. As our global sub numbers continue to grow, we've also exceeded our internal subscriber projections in every major market we've launched thus far, CEO Chapek said on the earnings call. We will continue our international expansion with the launch of Disney Plus in the Nordics, Belgium, Luxembourg and Portugal in September and in Latin America this November. And I'm happy to announce that we will also be rolling out Disney Plus Hotstar on September 5 in Indonesia, one of the world's most populous countries. Humble beginnings. It's hard to believe the $261 billion market cap behemoth started out in 1923 as Disney Brothers Cartoon Studio by Walt and his brother, Roy O. Disney. Highlights along the way included Disney's first sound film, Steamboat Willie, in 1928, its first feature-length animated film, Snow White and the Seven Dwarfs in 1937, and a foray into television in 1950. In 1955, Walt's theme park came into fruition as Disneyland in Anaheim. A second location in Orlando, Florida, was announced in 1965. The following year, Walt passed away, leaving Roy in charge. Walt Disney World opened in 1971, 2 months before Roy's death. But the company kept growing. During the fiscal year ended in September, the theme park and media giant generated nearly $70 billion in sales. Disney stock fundamentals and earnings. IBD Stock Checkup assigns Disney a 49 composite rating, which combines key fundamental and technical metrics in a single score. The media giant ranks 9th in the 26 stock media diversified group based on that rating. 4 of the stocks above Disney are various share classes of Liberty Media, LSXMK, Liberty Broadband and Fox. A 21 earnings per share rating reflects a 5-year earnings growth rate of -1%, which includes a flat result in fiscal 2017 and a 19% drop in fiscal 2019. Analysts expect a 74% EPS drop in the current fiscal year ending in September, followed by a 77% increase in fiscal 2021, according to FactSet. Is Disney stock a buy? After breaking out from a flat base and rising to record highs in November, Disney stock tumbled more than 40% during the virus market crash. It found a bottom on March 18 and has been trending mostly higher since. Shares traded along the 50-day moving average and shaped a flat base with a 127.92 buy point, according to MarketSmith chart analysis. The base is part of a larger consolidation. On August 5, following the earnings surprise, the stock cleared the buy point in heavy trade. It closed the session slightly below the entry but broke out again the next day in weak volume. On Monday, Disney stock gapped down and fell below its 50-day moving average as the broader market sold off. That brought it back below the 127.92 buy point. So, it's no longer in potential buy zone. It could retake the buy point again, though all purchases are at higher risk with the market uptrend under pressure. And its 21 EPS rating and 49 composite rating are well below the 80 minimum of most leading growth stocks. But Disney stock is one to watch as it holds close to a buy point. Thank you all for watching. Consider to subscribe and leave a like if you enjoyed today's video.